Curt Covington is on the road a lot, often a few weeks per month. Probably earns him a lot of frequent flyer miles, but it also sharpens his perspective about what's happening from one state to the next. He's already seen what's happened to the citrus industry where he lives in Florida, and he's watching what's happening to numerous other industries where he grew up in California. Hi, I'm Dave Price. Curt has now spent nearly a half century in agriculture and finance. For the past 6, he has worked at AgAmerica Lending. He's the senior director of institution credit. And credit has been tighter these days for farmers and landowners. We're going to get into what's going on and why based on Curt's experiences. But first, we need to catch up. Hey, Curt, good to see you again. How's life?
Very good. I live in Florida. How bad can it be?
Well, it depends on the weather. And if you got a hurricane knocking on your door, that's
no arguments here. Moving from California where there's earthquakes to the Midwest where there's tornadoes and the East Coast where there's hurricanes. I guess it's like you got to pick your poison.
Seriously. So your next career should be like the National Weather Service or the Weather Channel or something, right? You ought to be an expert by now.
Yeah, I thought about that, but I don't have a face for television. So,
man, you have good pipes, though.
Yeah,
you could have done radio. You got a good voice. Hey, you just mentioned all of that, but the one reason I like talking to you for a variety of reasons is that good or bad, you're on the road a lot. It probably depends whether that's good or bad for you sometimes. But because of that, you get immersed in regional, how things are going regionally across our country, and then you can also see things big picture, right? And I assume you can get out there in your line of work and really start to see the increased stress that folks are under. Is that fair?
Fair enough.
And how deep is this? Like, I'm wondering, one thing that we try to get in on this show is not generalize too much, right? Like, we can't just say ag sucks, ag's great, whatever, because sometimes some industries are really prospering, others are really suffering. What do you make of things right now?
So let's start with this. There are good operators in bad industries, but the majority of them are average to below average operators in a lot of these industries. And it is a regional situation. It's both commodity and geographic. Probably for the first time in 2 or 3 decades, I haven't seen this much stress out in the West Coast in a long, long time. And I've been doing this almost 47 years. And so
and you grew up out there. That's where you grew up, is California.
Yeah, I grew up in farming. I still have some farming interests out there, but the West, specialty crops in the West are pretty much in very difficult shape. Whether you pick almonds, really, probably you could count on one hand the commodities that are doing decently. Citrus is for the most part doing okay, but when you get to all the other commodities you mostly hear about in California, it's a bit of a struggle, including the dairy industry at this point. And so it's had a major impact on many of these farmers' bankability, able to be banked. It's having a major impact on land values, a lot of things that you don't see in the USDA reports. And a lot of issues with these farmers is that they've simply run out of cash. They literally have run out of cash, and no lender is going to lend you money if you're not going to share the risk from a liquidity standpoint. You go to the Midwest, you're starting to see the implications of lower commodity prices. I think your average corn and bean farmer across the Midwest is going to be posting some pretty significant losses from last year and into this year based on what we're seeing. And all of this is, I would say, the icing on the cake with all this is many farmers are not going to have the ability to refinance their liquidity positions because they've run out of cash. But you've got long-term lenders who look at this and say, there's no compelling reason for me to be lending you this money because you don't show the ability to pay it back. And I'm not saying that's true for all farmers. You've got the top tier farmers that have done things right. But the balance of the ag economy, the balance of the farmers out in the Midwest, much like out West, you have many of them that are in a position where they've got to refinance will take them to higher interest rates than maybe what they have now in their loan. Mm-hmm. They're in a depleted liquidity position. Their working capital is pretty much gone. You've got conservative lenders that are going to look at this and say, I'm just not willing to take a chance on this borrower. And, their average income over the last year and over the next 2 years is going to prove to be that they just simply don't have the ability to refinance. And so it's going to be, I think, a bit of a problem.
Would you say, I was surprised that it had been this long, but I looked it up. The last time we had you on here was September of 2024. And at the time you were warning, man, there's some pressures out there. I'm not sure that land values can keep bumping up the way they are. We may finally see that chill a little bit. Would you say that from what you've seen then versus now, back then we still had enough producers that were not as leveraged, so there was a little cushion there to absorb some of this, and that we've reached the point now where more of them have just lost that cushion?
Yeah, so I would say this: there's a number of things to discuss around that. One, good quality farm ground. Some areas of the U.S., good quality water are still in demand and are probably going at a premium to the market. The majority of these properties, I think, have reached the pinnacle of their land values. Or I think you're going to start seeing, and again, you're going to start seeing a decline in land values. There's no reason that shouldn't happen. And it's really because interest rates remain stubbornly high. Farm income is declining, regardless really of the region. Farm incomes are declining, and short of government payment programs and government subsidy programs, and probably short of the cattle sector, right? Yeah. Most farmers are in a position where they are struggling. So I think, and I said in 2024, I think land values are starting to probably reach a point of which they're going to top out. And without question, many, and if you go to particularly the West Coast, land values on the West Coast, and it depends on what part of the country you're in out there, but land values decline 10, 15, 20%. And when that happens, all of your lendable equity is gone. Your ability to refinance is gone. Your ability to recapitalize your lost working capital from farm losses, gone. And so it's going to be a challenge. The Midwest is going to, in my humble opinion as a lender, is going to experience the same thing, and it's starting right now.
And that's largely because of corn and beans?
Yes.
You're in Florida. You mentioned citrus in California, doing okay in California. Is that the switch where the suffering in the citrus industry in Florida is leading to opportunities elsewhere?
Yeah, Florida citrus was never really a fresh market product. It was always for juice. And as you know, with the citrus greening and the problems they've had there, most of the, less, I think, and I could be wrong, it depends on who you talk to, but 60% of the quality citrus groves are pretty much gone. So a lot of this, the concentrated citrus is coming in from Latin America, and it's being repackaged as basically Florida orange juice, so long as there's a certain percentage of that's actually Florida oranges. Fresh market citrus in Florida really is not, a game changer nationally. For the majority of fresh market citrus is coming from California, and it'll probably remain that way.
So what outside of citrus, is anything working in California?
Wow, that's a really, really good question. I can go through it. Okay, here's what I would say. The tree fruit side of the world, right? Peaches, plums, nectarine. There has been, a lot of cleansing in that market. And so the really good operators are pretty much the ones that remain. The ones that have redeveloped their property to the newest varieties that Walmart wants, that Kroger wants, what the big Costco's want. They've done it, and they've had the ability to get that done because that's a huge capital investment. So I think that, the tree fruit industry, peaches, plums, and nectarines have done, on average, okay. The table grape market is, it's a very bifurcated. It's the haves and the have-nots. Mm-hmm. There have been a number of have-nots that have left the market over the last couple of years. just because of the pressures of oversupply and those farmers not having the amount of capital to redevelop to newer varieties that you probably see in the grocery store. And the almond industry remains, I think, in very tough shape, although there's a lot of people that think it's going to get better. The pistachio industry, I'd say, is for the most part okay. The pistachio industry is fine, but it's going to start suffering, my personal opinion, from oversupply if they don't start finding ways to market that crop both globally and domestically. I could go the dairy sector on California, just to be very quick about it, is one of the most amazing sectors. California has wanted the dairy sector gone. The consumers, that they view dairies as nothing more than bad stewards of their assets. I mean, I don't know how else to explain it, but these dairy farmers continue to thrive, despite all the problems that they have. But most of them, it's because they run it like a manufacturing plant out there. And so they're excellent in controlling their costs, but the dairy market, again, is tough. So if I were growing wine grapes on the Central Coast or wine grapes in the Central Valley, it's been a bloodbath. And I could just continue on.
But so for those who are getting out of grapes, getting out of nuts in whatever form, maybe oversupply, whatever, you can't turn that ship around overnight because you have that lag. So you rip them all out if that's what you're choosing to do. Are they transitioning to something, or are they just selling and getting out?
Great question. So it's a combination of three different things. One, if they're what I would refer to as push piling and burning those trees, a lot of them may leave it as open ground and attempt to rent it, or maybe use it for hay or other row crops, right? Vegetable crops, for example. Two, they may preserve that ground for excess water. So under the SGMA rules out west, Sustainable Groundwater Management Act, that if they are in a district and if they have groundwater and if they are allowed to, they would be able to perhaps sell that water as opposed to farm it, be able to sell that water or use that water on other properties that they have. And thirdly, it's the ones that are just simply getting out, right? And the challenge, it used to be, up until a couple of years ago, there was a large contingent of institutional buyers out in the West Coast. I would say that's true of the Midwest as well. The institutional buyers have been on the sidelines for quite some time, but they're starting to come back into the market because they think potentially, at least this is my view from the ones I talked to, that this may be the trough in terms of where some of these properties are and some of these commodities.
Okay, so I'm fascinated how you gameplay this out in the lending side. So you meet with somebody, let's say late 2025, look ahead, you're trying to figure out they need some access to credit, right? Or maybe they want to refinance. The rates really didn't go down much. So I would assume you don't have a lot of that going on. But let's say they need a lifeline here. They need some credit. You can't forecast the war with Iran.
No.
Right? So how does that then add an extra dynamic? We've seen what it's done to gas, diesel, fertilizer, and some other supply chain issues here. We don't know how long this is going to go. How does that work into the equation?
Yeah, I would say it's really interesting. Depends on what the commodity is that you're attempting to market. So there are certain commodities that are very export dependent. For example, almonds is just incredibly export dependent.
Yeah.
You look at soybeans, you look at grains, they are export dependent commodities. And so anytime there's uncertainty in the world, it creates what I would say a bottleneck for the sale of our commodities overseas, regardless of where that is. Having said that, we have seen, particularly in a lot of specialty crops, for example, that there's still, while it's becoming more difficult and it's also becoming more expensive to export, they are able to export those crops. And a lot of this, it's kind of the push-pull, and a lot of these markets that we sell into now, you have a growing middle class, and it's offsetting all the other problems that we have. So while if everything were equal and the demand, there was no change, there was no growing middle class, there was not a middle class with money now, we would probably be in some pretty difficult times for some commodities across the United States. But I would say you start seeing in a lot of these countries, particularly Latin America and Southeast Asia, where the middle class is starting to, it's continuing to grow. They have available household income, and they want high quality U.S. products. Because while it may be more expensive, they can trust the quality of that product.
You mentioned the Midwest. So for those who are knee deep in corn and beans, are and the stress involved in those, are you seeing guys looking for a way out to do something else, or are they looking at it like I'm just done?
I'd say it's a combination of both. I have growers that are looking at it from, I'm just done. I'm going to seek, I'm going to seek an institutional buyer, or I'm going to seek somebody who's interested in maybe a neighboring farmer that
Hmm.
who's in a position to where he can take that property on, right? And then there are those that look at this and say, you know, um, I think I can, I think I can move forward, but I'm going to move forward perhaps in the form of a partnership with somebody who's got more liquidity and a stronger balance sheet than I do, and they'll create a joint venture, or they may just simply get out. And so we're seeing a lot of these Midwest guys that are also, the other complicating issues, they're getting old like me, and they don't have anybody in the family that wants to take the business over. They've seen their parents struggle, they've seen perhaps their uncle struggle, they probably have seen their grandparents struggle, and they say, this isn't for me. And so there's no one to pass the business on to. And so naturally the response there is, okay, let me just see if I can get this property sold.
I mentioned this to you when we connected back in late 2024. I'm the outsider getting into all this, and the thing that's both to me as an outsider inspiring, but almost maybe terrifying, is the younger ones getting into it who go into it knowing, look, we're going to take on a crap ton of debt, and we're going to have 1 to 2 off-farm jobs. And so,
Yep.
to your point, when your grandma and grandpa who were born into this, and this has been part of the family lineage for a long, long time, that has to be overwhelming for younger generations to look at this saying, if there's a debt load that you're dealing with, I'm not doing this. I'm not working a 40-hour a week off farm job plus X hours a week trying to make this thing work.
Yep. And so ultimately the problem is, right, somebody that wants to stay in farming, and again, maybe wants to have the two spouses are working off farm,
Hmm.
they're probably having to get help from the parents, right, who maybe
Hmm.
are carrying a note on the property as opposed to having those, or guaranteeing a note as opposed to them having to do it on their own. It is a huge challenge given the fact that you can pretty well count on the fact that any young farmer is going to have more debt. They're going to have to go buy more expensive equipment. They're going to have a very expensive operating line because they're young, beginning, and small farmers. And a lender, just to be honest, is not going to take a risk on something like that without getting compensated for the risk. Interest cost has gone from 2% of farm share of the farm dollar. For some borrowers, it's as much as 20% of the farm dollar. So if you're selling your crop for $5, you've got a buck of interest in that with farm real estate debt, operating debt, and equipment debt. And the other challenge you got with that, John Deere doesn't sell farm equipment anymore. They're just selling technology, and technology is expensive. And if you want that technology, fantastic, but you're going to pay for it.
All right, so from the lending side, as you look at the rest of 2026, what is working? Give us something positive out there. Like what makes this, let's put government assistance to the side because that's such a wild card and who knows what they're going to ever do with anything. But what are you seeing out there that is a positive that you look at when your industry is assessing, all right, this guy's got a plan, this guy's got a plan. I'm not sure this one's going to work out. Like, what are you looking for?
I'm looking for a farmer that isn't just doing the doing, right? He's not the guy that's just sitting out there getting on the tractor farming, 17 hours a day and thinking that this is going to work. They've got to be behind the desk pushing the pencil, right? So it comes down to this. The really good farmers, here's what I see. And this is just me talking, right? Let's start with the bad farmers. They still spend 60% of their time doing the doing, even though they may have hired somebody or may have kids in the family that are capable of doing the farming, equipment repair. whatever that might be. They still spend 30% of their time negotiating with people, right? They're negotiating with their suppliers, they're negotiating with their bank, they're negotiating with their family members, they're negotiating with themselves when they wake up at 3 a.m. thinking, what am I doing here? And they only spend about 10% of their time making good decisions because they don't have the accounting records. They don't have people that they can rely on to help them make decisions. And I think it's really important that you have people you can talk to that can help you with some of your struggles. You flip that over and you say, what do the good farmers do? What am I seeing in terms of what do my best farmers do? They spend less of their time doing the doing. They hired the kids, or they hired the farm manager, they hired whoever, and they realize, look, I'm a really good farmer, but the only way he or she is going to succeed at this, being my farm manager, is to let them make mistakes. You're still going to spend 30% of your time negotiating during the day. It's just part of the job. But the really good ones spend a good majority of their time making informed decisions about the next steps forward. And that means you do this. There's a 3-step process to this. 1, plan. Short-term plans, long-term financial plans. 2, have a control mechanism that says, okay, we created this plan. Okay? How is our plan working? Is it working well? Is it not working well? What do we need to change? Is it a short-term plan? Is it a 5-year plan? Is it a 50-year plan? I don't know, right? But is the plan working? And if the plan is working, how can we refine it and make it work better? Or if it's not working, or there's areas that aren't working, the last thing that fits into that triangle of planning control is decision-making. And people, typically farmers will have their meetings with their family around the kitchen table, which is probably the worst place to do it. But they go through this process and never really make good informed decisions. They basically make off-the-cuff decisions because they see somebody else doing something, or they simply don't really have the resources to help them make good, solid, good business decisions for the family farm. And so for me, the best ones spend a good amount of their time making really good decisions. They're not always right, but very good decisions through a planning, control, and decision-making process.
We're getting you on a jammed up day, so I'll end with this. Fast forward to the end of 2026, what can we expect to see?
I think there's going to be continued stress. I think interest rates, I don't see interest rates at this point
moving much.
Receding much. I think it's going to be a significant amount of stress on operating lenders to get money to the farmers that they have been banking over the years. You're starting to see here's what you're starting to see is you're starting to see a buildup of operating credit out there, and it's because a lot of these farmers have carryovers from the prior year. And a lot of these lenders don't really have a choice, right? They have to, once you're in, you're in. And I think there's going to be more stress. There's going to be less liquidity. I think commodity prices are going to continue to be what I would say probably, particularly in the Midwest, at a break even or below break even. I think that farmland values are going to start to decline in 2026, even though the USDA may still be looking back at what happened in 2025. I just am starting to see signs where land values are falling off 3, 4, 5%. And that's across the board. High quality ground, probably still going to sell to the right buyer. But I will tell you, the mid to lower quality farm ground, I think you're going to start seeing some real challenges there. And there's going to be an increased number of foreclosures, without question. So nothing good to say.
Yeah. Let's hope we get something that flips some of this around a little bit. Curt, I know it's a real busy day, so I appreciate you squeezing us in here. Always great to catch up with you.
Yeah, it's good to catch up with you. Let's do it more often, shall we?
Yes, sir. Sounds good. Thank you much.
Thank you.
AgAmerica Lending recently released its 2026 Ag Economy Report. What's in it? What does it mean? You can find it in our profile piece about Curt, and that is in the American Farmland Owner newsletter. It's full of interviews with some of agriculture's top thought leaders on the issues, trends, and challenges in the industry. It is also the place where landowners get their news every week. You can find it now at AmericanFarmlandOwner.com. Thanks for joining us here on the podcast, and thanks for caring about the future of our farmland.